Well, welcome everybody. My name is David from mortgagewebinars.com. I'm excited that you're here with us this afternoon. We have an awesome presentation on the topic of doubling direct mail response rates and sales conversion percentages. We've got two industry gurus that are going to just basically come unplugged for the next 60 minutes and just give you some great strategies, some great tactics, and help you to improve your response rates and your sales conversion. The agenda for today, you saw it on the presentation, or the invitation, I should say, and just a quick recap. This is going to be one where you're going to want to focus for 60 minutes, and I know a lot of you are type A, you got a million things on your mind, you got emails to check, you got social media stuff, you got other meetings that are coming up. Hey, I'd love to just have you focus here for this next 60 minutes. I think it's going to be well worth your time. Jeff and Dale have really done a great job in putting together a value-packed presentation. And we're going to share with you how to market to the best mailing list. I know a lot of you submitted questions about that. I noticed a lot of you asked about how to write compelling offers and what the best offer was to increase that response rate. We're also going to talk about some common mistakes that top mortgage executives are making that decrease their conversion, and they don't even really know it. And this is going to be something to be brought to light that you can make those corrections if that's something going on in your organization. We're going to have some voicemail scripts on how to convert individuals that you're leaving messages with to help them to want to call you back and desire to call you back. Dale's going to talk about the follow-up call cadence. He's got a masterful strategy on how to follow up and get those closing ratios improved. We'll talk about curiosity hooks and how to keep leads engaged and help them to call you back so that you can leverage your time and your sales team's time. And then we'll talk about how to create powerful value-based messages to increase trust, which it's the speed of trust is what will dictate those conversion ratios. And if you're not doing a very good job of that, tonight will help you a lot. You'll get a lot of great ideas out of this. So let's introduce you to our first panelist today. The marketing guru is Jeff Bush. He's got 20 years of direct mail marketing experience. Many of you have probably seen the names of his clients. They're nationwide lenders, and he's the guru behind the scenes. And his organization, Overflow Works, is one of the top-rated companies out there for direct mail marketing, internet leads, and internet lead marketing, email marketing. And he himself has been in the industry, so he understands the challenges of mortgage executives. He had a mortgage banking company that closed over 5,000 loans in $1.7 billion from 2000 to 2007. And he's been leveraging direct mail as his primary lead generation tactic in his mortgage business until he left the industry to get back into the direct mail market. And now he's been considered one of the top consultants to a lot of these top mortgage companies and mortgage executives to really help them to not only increase their response rate on direct mail, but really become an outside source that's unbiased, that can give some additional perspective on how to improve those closing ratios. He's going to share some of those today, but Jeff, we're glad to have you here on the webinar.
Yeah, thanks for having me, Dave. Excited about it.
Talk to us a little bit about Overflow Works and a little bit about your background. You were in the mortgage industry, you did very well in it, and then you left the industry. Talk a little bit more about the experience that you've had in this 1 billion pieces of direct mail that you've mailed.
Well, I've been doing mortgage direct mail since like the mid-90s. So, you know, hundreds of millions of pieces of direct mail. I've marketed every mortgage product that's ever been out there, from Title I loans, if you remember those, $35,000 home improvement loans, to the 125 craze when it was we'll loan you 125% of your home's value with a 620 credit score, paying off credit card debt, to reverse mortgages, FHA, VA. So just a long history of doing direct mail, pulling data, writing letters, you know, trying to increase response and conversion rates and lower cost per funded loan. So that's kind of been my experience. And then we sold a big direct mail company in Orange County, California. So I had a non-compete for 3 years. So I decided to go into the mortgage business. So for 7 years, I owned my own mortgage company with a big warehouse line, an escrow company, funding loans. So I've kind of been on both sides of it. And I think that helps from a marketing perspective, knowing what it takes to close a loan and knowing all the little niches of different products that come out, either from the government like HARP or FHA, knowing, you know, about mortgage insurance and VA loans. It just helps me write better letters, pull better data, get a higher response rate and a higher conversion rate, lower cost per funded loan, which is what it's all about in the mortgage marketing game.
Yeah, well, we were talking earlier about this idea where, being in a mortgage executive and being in the direct mail business is kind of like being a pitcher in the major leagues. And, you got to have some different pitches to stay in the league and to be the most competitive person out there. You can't just be throwing fastballs all the time. And, a lot of the big mortgage companies are mailing to the same mailing list. And so one of the things that you were going to talk about today was just the idea of, how to increase response rates by changing it up and including variable data inside of the marketing pieces. This is a marketing piece that you've got. Walk us through a little bit about what's so valuable and how this is increasing response rate.
Well, this is just one sample letter, but this letter gets mailed to FHA borrowers. And one thing we know about FHA borrowers is they hate government mortgage insurance. They know it's bad. So when we do the direct mail, we record all the phone calls, and I personally listen to hundreds of phone calls that come in off these direct mail pieces, and I listen to what the borrower says. And a lot of times the first thing they say is, I got your letter and I want to get out of my mortgage insurance. It's very expensive. So we write this letter with some real specific information, get rid of your mortgage insurance, but FHA conversion program for your city. We put a lot of variable data. We try to talk to these borrowers directly about their city, their loan amount, their mortgage insurance factor rate, their interest rate, how much they can save per month, per year. So a lot of times people say, well, it's all about getting a good list, or it's all about writing a good letter. What we've learned is it's not one or the other, it's how you blend the two things together. So we take a really good mailing list that's very accurate with what month and year their FHA loan funded, and we append, their current mortgage insurance factor rate, and we actually break down on the letter, here's your current mortgage payment, here's your interest rate, here's your mortgage insurance, and then if you call us today, here's your new payment, and here's how much money you can save per month and how much money you can save per year, showing all these variable numbers that are very relative to the consumer's mortgage. And then we give them, 10% of their loan amount for cash out, show them that option. You can take $10,000 cash out for $49 a month. So it's how we use the data, how we blend it into the letter and make that offer relative to the borrower. So that's a big part of how we increase response rates.
Yeah, variable data is obviously something that's got a high response rate, and that's an opportunity for you to weave that into the letter. And a well-written, copyrighted letter is going to give you an improved response rate. But there's also this idea of using some more creative strategies like handwritten envelopes and double window envelopes. Walk us through what you found with those, Jeff.
Well, the statistics say that 60% of a number 10 window envelope get opened. So 40% go in the trash and never get looked at. So if you put a live stamp, and this is called a closed face envelope with a handwritten font on the envelope, with no return address, we call this envelope blind. It's really hard to say who sent this to you. So this envelope might get opened 80% of the time instead of 60. So if I get 20% more people to open the envelope, it's feasible I could get 20% better response rates. Now the closed face envelope with a stamp, it might cost 10% more. So overall you're getting a 10% lift in your response rate, per dollar amount. But we do these blind envelopes with stamps on them. And then the double window 6x9 envelope, we'll show through the top window, hey, your FHA loan, you could save $12,000 per year. So when they get that envelope and they see their FHA loan with a $12,000 a year savings, again, we might get an 80 or 90% open rate on that envelope. So these cost a little more, but little tricks you can do with direct mail to get a better open rate, get a better response rate.
Yeah, I know we're getting a Q&A coming in about the idea of which one's the best, and your response is yes, right? I mean, you gotta try different strategies. You want to expand on that, Jeff?
Which one's the best? Great point. I mean, the reason professional CMOs with $1 million direct mail budgets test every month is it's always changing. We don't always know what's best. We're going to go in with our best letter, best envelope to start, but we do a lot of testing, and we might mail 3 versions. It could come down to, well, which mailing list are you mailing? Are you mailing FHA? Are you mailing jumbo? Are you mailing VA? Because each one of these borrowers is a little different and responds a little different. And a lot of it depends on how much mail they're getting at their house. if they're getting 5 letters a month in a number 10 window envelope, and they have a VA loan, we might do a snap pack or a double window envelope just to show up in their mailbox different. So a lot of times it's just about being different from everything else they're getting. So we do a lot of testing. We can show you, here's our best 3 letters. You want to test all 3 of them? Let's mail 10,000 of each letter. And one could be 50 calls, one's 80, and one's 40. So it's all about testing. And we can go in with our best mailers first, but sometimes the next month it's different. So we rotate a lot of these letters and do different ones each month just to show the borrower something different.
Well, you've also found that including a credit card, a hard piece inside of that mailing letter actually has a better shelf life, which oftentimes can improve the response rate. You want to walk us through that?
Yeah, so Fannie Mae came out and said, hey, if you refinance a Fannie Mae-owned mortgage through HARP, we'll actually give you $500 to rebate the borrower, which I thought was kind of crazy. Isn't that an illegal kickback? But Fannie Mae decided to do it, give the borrower $500 if they close the HARP loan. So one of our lenders found out about it, and we did this $500 gift card. So as soon as they closed a loan, you would ship them a $500 gift card. But what we did on this letter is actually printed this 30 mil thick, same as a credit card, and embossed their name on it. And so we glued it to the letter. So when you get the letter at your house, you can feel that there is something in the envelope. So again, the open rate goes up. And then when they open the letter, they can pull this card off that's glued on, keep it in their wallet, decide when they want to call and move forward with the loan. So, this took the cost of the mailing from, 50 cents a piece to 80 cents. It increased the cost by 40%, but it doubled the response rate. So it doesn't matter how much the mail costs. What matters is how much you make on it. And that's hard sometimes for people to understand, but that credit card lifted response substantially with that offer.
We've got a lot of reverse mortgage executives that registered for this webinar, and you've got a reverse letter here with one of the top reverse mortgage companies in the country. Walk us through what was so powerful about this letter.
Well, again, variable information. So we can figure out how old the borrower is, get an estimated home value, and we can do a calculation for a lump sum payout or the monthly income they can receive off of the reverse mortgage. This particular lender was giving out a free DVD, and so different offers, printing the front and the back side of the letter. So reverse is a tough niche. It's very saturated out there, but we can still get a good response rate. And because these lenders are making 10 points on these loans, if you could get a loan funded for $2,000 and make 10 or 15,000, it's a great ROI. Response rates are kind of low with reverse, and it's a little tricky, but we can generate a good letter, good response rate on reverse.
So we've flown through about 4 different strategies, and I'm assuming that there's some folks out there that are still trying to figure out, okay, which one is going to double my response rate. So you want to walk us through kind of what your overflowworks.com company does to basically assess an individual's or organization's current marketing strategy and how you're going to customize it or customize the solution to them?
Well, 60% of your response rate is the data, and 30% is the offer. The type of mail piece you do really isn't a huge effect on it. You want to show up a little bit different, but we're going to talk more about trying to find data that's not saturated. FHA and VA borrowers that are getting 10 letters at their house every month, that's what's hurting your response rate. So we're going to try to pull some data that's a little hard to find out there and not beat to death with direct mail. So the first thing we go to is data, and we can talk to them about how much data we have in their states, how many new homeowners, how many non-owner occupied borrowers are out there, where some of these mailing lists that are very hard to get, not all my competitors know how to get. That's the first step is getting the right data. Then we write the letter and show them, the best letter to get the best response, what interest rate we're going to advertise on the letter, what all their competitors are sending out, so we can go in with our best foot forward. It's an overall, analytics of the letter, the data, the offer, and we'd love to connect with some of these people one-on-one and show them a specific strategy.
Great. Well, I know you tested kind of a unique strategy, this idea of actually putting a cartoon on a actual letter. Talk about how this impacted the response of this letter.
Well, I'll tell you something I've learned about direct mail in the mortgage industry specific is tricky works better than pretty. That's one of our sayings. So tricky just always gets a higher response rate. So we've got this ugly cartoon character at the bottom left. And what we did is we took a list of anybody that had a VA loan that was adjustable, and we mailed these adjustable rate VA loans with this letter that says, hey, it's come to our attention that you may currently have an adjustable rate arm. Fortunately, our firm is in the business of mending broken VA arms. And we show a picture of the VA guy with the broken arm and the sling. And people would kind of laugh at this, and it just made the phone ring at a 1% response instead of a 0.2 on the VA borrowers, where VA is pretty saturated out there. So mailing a specific offer for an adjustable rate loan when you know they have an adjustable and putting this picture on there just lifted our response substantially.
Great. Well, I know that there's been some people that have submitted some questions, and if anybody else has a question, shoot it over in the comments or the Q&A section, and we'll be trying to get to some live Q&A here at the end of the presentation. But Jeff, talk a little bit more about the power of snap packs, because there's a lot of people that are big fans of snap packs, and why are they a good tool?
You know, snap packs look real official when you get them. They kind of look like a government document, and there is a place for snap packs. You can print them and mail them really fast. So we do a lot of snap packs. I usually start out with letters and envelopes, but sometimes the snaps get a little higher response one month, and then the letters and envelopes are higher the next month. So we just like to change out the mailer and not mail the same thing to the same people. So we have a strategy where we start with a letter and envelope, and then we move over to a snap pack just to show something different. And this has been a pretty effective one for us, for different lenders. So,
hey Jeff, Tom has a really good question here. He asked if you generally suggest a firm offer of credit.
Good question. So, firm offer of credit means you're getting your data from the credit bureau and you're pre-approving them for a loan. Most of the big lenders only mail credit data, and I think that's a mistake. You should be mailing credit data and public record data, because the credit bureau, a lot of people have called and opted out of the list, so you cannot mail them. You can't buy their name and address from the credit bureau, 40 million people. So there's a strategy for credit data. You know, it's great to be able to have a credit score and how much credit card revolving debt they have, and that's the only place to get it. So if it's a cash out mailer, debt consolidation, you should go to the credit bureau, but we're having a lot of success with our public record data that's just cleaned up for both FHA and VA. You don't really need to do a firm offer of credit and buy data from the bureau. It's more expensive. There's a lot of compliance around it. Your disclaimer's a half a page long. So we do some credit data and triggers, but it's very little of what we do here. A lot of it's public records with a better ROI overall.
Yeah. Well, you had a strategy where you were actually doing a direct mail campaign to internet leads for a large company. Talk about how that ended up improving their internet lead response rate.
Well, the average response rate on mortgage direct mail in America right now, I would say, is a 0.3. So you mail 10,000 letters and you get 30 phone calls and you close 3 loans. Our average response rate in here is about a 0.6. We can usually double that just mailing our basic FHA, VA, HARP, conventional letters, simple black and white letters. But we've been diving into buying like 10,000 internet leads, and we mail these internet leads, and because they've already raised their hand and said, I'm interested in refinancing my VA mortgage, the first time we mailed 10,000, we had 320 phone calls, a 3.2% response. So these internet leads are not cheap. I mean, they might cost a couple dollars to buy the lead and then 50 cents to mail them. So the direct mail cost might go up by 4 or 5 times. But if the response rate is 10 times the response, it pencils out. And once we buy these internet leads and mail them once, we can mail them a second time, and we're still getting 2% response mailing the second, third, fourth time around. So it's a great strategy. It's a high response rate, and it's amazing that these internet leads are responding so well. And there's hundreds of thousands of internet leads aged, 30 days old all the way out to 6 or 8 months old that never funded a loan. So it's a great strategy, a high response rate. You just got to be able to stomach the upfront cost of buying the internet lead.
And we're going to talk about how to improve those closing ratios and those response rates with some sales tactics and strategies in the second part of this presentation. So hold on to your seat. We got some great tactics and strategies coming up. Jeff, this is another expansion on the credit bureau data and public records. Talk a little bit more about how you're using this kind of information.
So just something I wanted to point out, Quicken Loans is mailing 5 million pieces of mail every month, and at the very bottom of their letter it says, hey, if you want to be taken off the credit bureau mailing list, call this 800 number. People don't realize 40 million people have called that toll-free number and opted out of the credit bureau, so you can't mail them a letter. You can't buy their name and address from the credit bureau. And this letter on the left, I got it at my house from LifeLock, and I circled something. The first thing LifeLock tells you when you sign up is, hey, call the credit bureau and opt out of all the mailing lists so that they can't share your information. So credit bureau data is great, but you're missing a big part of the market if that's all you're doing. So you should be mailing some public record, ITA, invitation to apply data in addition to pre-screen. LifeLock and Experian are in a big lawsuit right now. I think Experian's mad LifeLock's making their mailing list get smaller. They can't sell the data because of this, so reduce the pre-approved offers. So that's it on that slide.
Well, this has got some really small numbers, but you wanted to show the entirety of the list, but it shows the national counts of all loan types, and this is something that they can contact you to get a copy of so that you can actually share this information with them personally. But what would you want to highlight here, Jeff?
We just have all these mailing lists broken out by, FHA loans, VA loans, reverse mortgage, HARP loans that are still out there, jumbos, adjustables. So these are just counts broken down by state that we provide to our clients and say, okay, here's the hot spot of the list. Here's the first data you should mail to increase your response. And it just kind of gives the total quantities. This is something we can do one-on-one with a client if they want to look at, how many people can we mail at the high response and before we run out of data, good data.
Well, let's talk about ROI, because I know that that's a big question mark for a lot of individuals right now, is that how can I end up increasing our ROI? So walk us through some sample marketing budgets and ROI.
So this is, hey, if you had $10,000 to spend and just throwing out a random average of 50 cents for a direct mail letter, you mail out 20,000 letters, you spend 10 grand. Each campaign is going to have a different response rate and a different close rate. So I've got listed here FHA, VA, HARP, reverse, and conventional. And also some people make a lot more money on the Govy loans, FHA, VA, than they do on a conventional loan. So you kind of got to look at the whole picture as far as where you're going to spend your money and what your return's going to be. If you look at the very bottom, if you spend 10 grand on direct mail, real conservatively, we should be able to get 72 phone calls and 7 closed loans. It's $1,535 per funded loan to close a loan off direct mail. So you spend 10 grand, you make 52,000 back. A 5 times ROI is kind of an average, ROI. I mean, do I have clients getting 1, 2, 3% response? Yes. Do I have clients getting a 0.3? Yes. But this is a pretty good average on ROI. This slide, Dave, just shows a big national lender we do a lot of mail for, what their results were in the fourth quarter of last year. They spent $440,000 with us. We mailed 800,000 letters, and these are all different campaigns, different data sets, HARP, VA, FHA, cash out, reverse. So it shows bottom right corner, they funded 351 loans, and their cost per funded loan was $1,254. But you can see each campaign has a big difference in cost per funded loans. So we're doing a lot of testing and a lot of different loan types, trying and just kind of keeping this going.
Yeah. Well, there's, I know, again, this is information. If you'd like to get more information on these slides or the slide deck, you can go ahead and email response to Jeff's organization. They'll get you some more of this information. Jeff, talk a little bit more about FHA.
So if you mail 10,000 FHA mailers, we can go find about 5,000 email addresses that match that FHA borrower's home address. And we can send emails for 2-3 cents a piece instead of 50, 60, 70 cents on direct mail. So we can do some email marketing, and it's pretty cheap and it's pretty effective. This is a sample of an email that went out to FHA borrowers. The subject line, your FHA loan on 123 Main Street. So we variable out. They see their address in the subject line of the email, which helps get it open. So we do some email marketing.
Talk a little bit more about internet leads and the opportunities that are available and what you've seen in terms of companies marketing in a direct mail way to internet leads.
So a friend of mine, Drew from iLeads, he presented this at LeadsCon up in Vegas. I was up there this last few months back. And what he said was they studied 2.3 million internet leads that hundreds of companies purchased these leads, and only 5% of them turned into a funded loan. And that 5% was between all the companies combined who were calling and emailing these leads. So 95% of internet leads never turn into a funded loan. And that's why we're buying these leads and mailing them and getting such a high response and getting a 10% conversion on incoming direct mail calls from internet leads. So just kind of shows you that there's some missed opportunity out there on internet leads.
Yeah, and one of the comments in the chat message was about the idea of why would you respond to an internet lead with direct mail? Why not send them an email? What would your response to that be, Jeff?
Because if you buy 1,000 internet leads, you're only going to get a hold of maybe 400 of them. You're only going to have conversations and emails with 40%. So the 60% of the leads that you buy that you can never make contact with, why not spend another 50 cents mailing them? You already spend $5, $10, $40 on the lead. Spend 50 cents and mail them and get a 3% response and a huge ROI.
Sweet. I like it. Let's talk a little bit more about some of the potential out there.
So this is the number of funded loans by loan type off internet leads. Out of those, I think 2.3 million, internet leads that were generated. So just shows you some of the big states, California obviously being number one, but loan volume, obviously 18 billion conventional. FHA drops way off, and then VA. So just kind of showing, some interesting stats on internet leads and what's funding out there.
Well, you've used this PIN technique to increase the response rate and not only increase the response rate, but also the conversion rate. Talk a little bit more about how the PINs work.
So every direct mail letter we do, we're showing 2 on a sheet because that's how we print on Xerox lasers. They have different PIN numbers on them. So when the borrower calls in, the loan officer just asks, what's your PIN number? They put it into our website. And if you go to the next slide, I think it shows the website where you can go test these things out. It's overflowworkslookup.com. So they go to our website, they put in the PIN number, and everything on that borrower pops up on their screen. So if you go to the next slide, the first thing you see on our website when you put in that PIN number is a Google Maps picture of the house. So you can talk to about their house and their swimming pool and their boat and the golf course they live near. It shows you who's on title, the legal address, property taxes, the year built, all the title information. But it also gives you average income and credit score for that neighborhood. Gives you a home value from a pretty accurate AVM. The next slide, David, it shows you all the open liens on the house. So what's interesting about this report is if they're in an adjustable rate loan, it'll show you their current interest rate, their index, their margin, when the loan goes adjustable, and it'll show you the lender name. So basically, instead of having to ask the borrower like 20 questions when they call, everything is answered for you in this report except for their W-2, what's your income, and their social to pull their credit. It'll also show you the recent comps in their neighborhood, so it'll give you a really good idea of what the house is worth, all on our website. A lot of people have this through title for free, but they don't have all this information in just off the PIN number on the direct mail letters. So this has helped a lot of lenders have better conversations with the borrowers, be more informed when they call, and therefore close a higher percentage of their calls on direct mail. So
as we wrap up the marketing, improving the conversion rate or improving the response rate, Jeff, I want to have you talk a little bit more about some of the social and some of the online marketing you're doing.
So because we have these people's name and address and a lot of email addresses, we can go into Facebook and match them back to Facebook and post on their Facebook page. So I went home on my personal Facebook and Rocket Mortgage had posted something on there, which was pretty interesting. This is not retargeting. This is not, it's literally just matching our direct mail file with those same people on Facebook. So we can post on Facebook, and that's just digital. It's pretty cheap to do that. So you're going to hit them in their mailbox. You're going to hit them on Facebook, hit them in their inbox. we can give you the phone number. You can call them. It's just that multi-channel direct marketing. If they go home and get on the internet on Google, Bing, ESPN.com, we can flash these banner ads that are very relevant to the VA borrower, showing like 100% refi. So we do some banner ads for lenders in addition to the direct mail.
Right. Well, you've given us a ton of information, ton of great strategies. In terms of any other final comments on website landing pages or campaigns that you're doing?
We can build landing pages. We can take YouTube videos and post them and make them real specific to the borrower. Like if you have an FHA loan, we're going to send them to an FHA landing page. We're going to play a video all about refinancing your FHA loan. So these are just kind of some new digital developments for us that tie in nicely to the direct mail.
Great. Well, we're going to continue to have Jeff involved in the conversation here, but we wanted to give people the contact information just in case they want to jot it down. And Jeff, I know that there's quite a few people that are registered for this webinar. Some of them are watching the recording. Any final comments that you'd like to share with the individuals when they're calling in?
Normally it takes an hour to go through this presentation. I just did it at 30 minutes. There's a lot of information here. So I just encourage people, if you're doing direct mail or you're thinking about it, schedule a call with us. We'll spend an hour on data, letters, and go through a lot more detail. I'm hoping we can have one-on-one, meetings with anybody that has any interest to cover this in more detail. So thanks for letting me talk about this, and I look forward to meeting some people on the phone when we connect in the next week or two.
Great. Well, thanks, Jeff. Well, I get the enormous pleasure to introduce a great friend and one of the top industry icons for sales training. Mr. Dale Vermillion's been around for a long time. Looks like a kid still, but we don't want to give away his age here. But he's a 21-year speaker, trainer, and consultant, and he's trained over 1 million individuals and over 400 lenders, and his clients are just like Jeff, some of the top lending institutions in the country who bring in Dale as their effective trainer to be able to increase their conversion ratios as well as become top performing employees. And so Dale, it's our pleasure to be able to have you to talk a little bit more about improving those sales conversion ratios. Welcome.
Thank you so much, David and Jeff. Great to be with you. Great presentation, Jeff. Good stuff.
Well, we're jumping right in here to talk a little bit more about improving conversion ratios. And I know you've been out there on the speaker circuit. You're out there training and doing consulting. What are the mortgage executives that are on this webinar? What do they need to know? What are some of the things that they can do?
Well, there's a couple of things. And first off, let me just say, working with C-level executives around the country and consulting to literally over 400 companies in 21 years, marketing is a key piece of your success as an organization, as everybody well knows. And what Jeff just provided you with was some really powerful techniques to really bolster your conversion rates from the standpoint of getting people to respond to your marketing campaigns and getting people to talk to. But now I want to talk about the other side of that equation, which is the sales side. And the first thing that everybody needs to understand is that these low rates that we've had are not going to be here forever. I think that's the first thing we got to start with, because I think we've gotten lulled to sleep by the 7.5 years of low rates that we've seen, which is about double the normal gap or trend that you're going to see in the industry. After 33 years of doing this and watching rates for all that period of time, we've never seen a market ever that's been more than 4 years that's been a low rate market, and certainly never seen one where rates were below 3% for this period of time. So you've got to understand from a marketing and sales standpoint, you're not going to have the benefit of these super low rates in that campaign. You've got to start learning how to sell benefits to your borrowers. You can use marketing to get them to respond based on rate, but once you get them on the phone, if you continue to talk enough about rates, you're going to get annihilated, particularly in the market as things start to go up. So I think that's the first thing. So you can go to the next slide, David. The key to understanding today's market is understanding that the industry has never been more commoditized than before. If you look around the industry, we're all within an eighth of a quarter to each other. So, I listen to loan officers every day. I'm training thousands per month, and it's the same old for most loan officers. They get on the phone, first thing they do is talk about their interest rates, tell the borrowers they're going to provide them the best rate around, and that's wrong. You're not. The fact of the matter is somebody can always beat you, but even if they do, they're only beating you by an eighth of a quarter anyway, which in today's market is only anywhere between $13 to $23 a month based on the standard $200,000 loan. So understand that You can market all day long and bring people in based on the low rates, and that's a powerful, positive way to really build a lot of opportunities. But when you start to sell, you got to transition that into more of a benefit-based approach. And because of that, price and product have just simply never meant less. Today, you don't differentiate yourself as a lender today by having the best rates or the best fees, because even if you think you do, there's somebody who's going to try to beat you. It really comes down to customer experience today. I think that's the key as to what really separates one lender from the other. And when you get that borrower, making sure that they have an experience that's second to none.
What's a couple of common things, Dale, that you would say are like most mortgage executives are not including this in their experience?
Well, let me say a couple of things. First off, here's the number one mistake that I find. Mortgage loan officers talk, act, and look like mortgage loan officers. That's the first mistake. If you think about, you take any consumer on the planet and give them these two words. The first one is mortgage. Ask them what they think of a mortgage. You're going to get nothing but negative connotation. It's debt. It's a long process. It's something they don't want to do. Then you add to that loan officer, and now you get a second negative connotation. So we get on the phone, we start talking like mortgage loan officers. That ain't going to work. You've got to create an experience where that borrower feels like there's really one focus you've got, and that focus is to be a financial consultant, a financial advisor to them, an advocate on the single largest transaction they go through financially, usually in their lifetime. And that means that you better be innovative and not imitative. You know, you think about it, every borrower asks the same question: what's your rate? Their focus is getting a low payment. But the problem is almost every loan officer does the same thing. They talk rate and payment too. So if you want to have a powerful organization, what you got to do is you've got to get that borrower on the phone and don't talk the same thing as everybody else. Innovate that borrower to say, look, let me tell you some things we're going to do for you that other lenders aren't doing, and really starting to create that right customer experience. That make sense?
You bet.
Okay, so let's talk about 5 simple techniques, 5 things you can do to really maximize. If you want to go to the next slide, I want to walk these guys through 5 keys to lead conversion success. You can back up one slide for a minute, David, because I do want to kind of show them this. Everything that I teach and everything that I built all training around for the 21 years that I've done this is built around the simple thing called the triangle of success. And what that is, it's 3 key components: value, relationship, and differentiation. Value being the initiation of the lead, which we'll talk about next. Relationship being the application process. Differentiation being the sales proposition. So when you lead into a call, no matter how you market to them, you can market on rate all day long to get people to respond. But when they get to that loan officer, you got to transition that out of rate into value. And that means talking benefits, not talking price and product, because you're just going to create shoppers and lose in this trigger-happy world that we're in today. Once that's done, you got to build that long-term relationship that leads to loyalty, not just liking. You don't want your borrowers to like your loan officers. You want your borrowers to love your loan officers. They've got to build true relationships. And the best way to do that is by being that advocate I talked about a moment ago that creates differentiation by giving them some different things to talk about. So now that I've said that, let's move into the 5 keys to lead conversion success. Let's start with number 1. It begins with quality. You've got to make sure that you are taking a quality-based approach. Now, what do I mean by that? Well, there's really only 2 approaches to lead conversion and to sales in the mortgage arena. You're either taking a quality approach, which means that you're slowing down, taking your time, focusing on better quality candidates, and not in a rush to work through those, or you're a quantity approach. You're mass marketing, and then what you're doing is your loan officers get on the phone, they're order taking, they're trying to take quick apps, throw rate quotes up against the wall and see what sticks. Well, in 2010, 11, 12, you could take a quantity approach and win because there was so much business out there. There was literally 50 million homeowners that were hungry to reduce their rates because of the market at the time. We had probably within that about 90% of those borrowers because of the HARP program that we could work with in some way, shape, or form eventually. We've eaten up a lot of that business. Today, you don't have that same wealth of business out there. So you can't just have loan officers who are just throwing out offers to everybody and hoping they're going to stick. Instead, you got to take a quality-based approach. And that means when you get on the phone, it's a value proposition built around relationship that's going to create differentiation. And that means you got to take time with the borrower. You're looking for better quality and caliber borrowers. You want to go after a better demographic of borrowers to make sure that it matches up to today's market and the guidelines you have for your products. And then slow down and take your time. Once you get them on the phone, don't be in a rush to make an offer. That leads to number 2. Number 2 is quantity. You want to make sure that from a quantity standpoint, what you're focused on is quantity only from this vantage point. It's not quantity of number of borrowers you're talking to. It's quantity of time that you're spending. That's the key to all of it. Look, I teach this simple principle all the time, okay? I travel the country, and I will tell you that most loan officers nationwide are closing between 2 to 5 units a month. The good ones are doing 4 and 5 and 6. The bad ones are doing 2 and 3 in most environments. Now, there's some environments that are different. If you're in a portfolio retention, totally different numbers. But if you're in the general marketing world out there, you're doing direct mail, email campaigns, you're doing aggregate leads, anything like that, you're probably looking at most of your loan officers doing 3 to 4 to 5 loans per month. Well, I train companies where loan officers do 15 to 20 a month in those same exact environments. And part of that is helping them understand that the key to your success is not focusing on the closing, it's focusing on the sale. If you get 1 sale a day, you're literally putting 21 deals a month in your pipeline, and at a traditional 70% conversion rate, that's 15 loans per month. So if you can focus your loan officers on getting quality leads they spend quantity of time on, instead of getting any kind of leads and just throwing a bunch of offers out, you're going to see a much better conversion rate overall at the end of the day. And that's what you want to try to create. That leads to step 3, and that's your approach. It's all about your approach. Your approach has to be a benefit-based approach. What does that mean? That means I'm not just getting on the phone and quoting a rate. I never want to do that, because all you do is give that borrower what they need to shop you. Instead, I'm going to talk about what I'm going to do that others aren't doing. For example, if I'm on the phone with the borrower and they're looking to lower their rate, why are they looking to do that? Well, the answer is simple. Because they are looking to try to make sure that they are getting the most savings they possibly can. That's what they're looking for. So, in other words, if I'm looking to have a borrower on the phone that's looking to save money, which is really their ultimate goal, how many ways can I save them money outside of just payment reduction? Well, I can reduce term, I can reduce taxes, I can provide them with savings up front through taking them out of their mortgage payment and giving them an opportunity to make sure that they skip a payment, which is going to put $2,000 or $3,000 or $4,000 in cash in their pocket. I can also provide them cash as part of that. There's a lot of ways to save money. The more you can build your approach around multiple benefits versus just, hey, we got some of the best rates in town. Hey, I got rates today as low as 3% today in this market. You just shot yourself in the foot, because they just saw 2.875 on some website somewhere, or up on bank rate, or got quoted that by another loan officer. Instead, if your response is, hey, here's the deal. Everybody's got awesome rates today. We're all a commoditized market today. We're all within an eighth of a point of each other. It's the best time in history to apply for a mortgage refinance or a mortgage purchase. And here's the deal. I'm going to show you how to not just get that great rate, but how to lower your payments in the process, how to get a payment that's affordable, how to make sure you're saving money in multiple ways, make sure you're getting out of debt faster, and even provide you cash in that process. Now you've got an approach that makes more sense to the borrower, and they want to listen to it. And I'll stop there, David, in case you have any questions.
Yeah, a couple of clarifications. Jenny asked the question, you had mentioned the number 70%, and I think that it was in relation to closing ratio. There was 21 loans in the pipeline, 70% closing ratio, which equals 15 loans closed.
That is correct. The back-end conversion rates, I've been a consultant for 21 years. I work with hundreds of lenders. The traditional rates run on a low of about 50% at the very lowest on the back end and 80% at the very highest on the back end. And that's from when you put the deal into pipeline. So you've literally got a committed sale. You've got a borrower who has given you documentation. They've already signed their disclosures. That's the conversion rate I was referring to.
Well, you've given us 3 great strategies with a couple still to come. Talk a little bit more about best practices for training and to, move a high-performance sales team into that next level. I mean, if you've got some individuals that are doing the rate quotes, if they're, throwing stuff up against the wall, what's the best thing as a mortgage executive that I can do as a top sale? I've got a great sales team, but they need to get better. What's my first step to implement those first 3 things? Is it to have a sales meeting? Is it to invest in a training program? What do I need to do?
Well, certainly because we do training with loan officers all over the country, I'd be a crazy man if I didn't say the best thing you could do is invest in hiring a company like mine to come in and train your people on these techniques. But if you want to do it on your own, here's the key. Just what you got to do is you got to sit down with your loan officers first off and spend some time with them to literally listen to calls, tape calls, and show them the end results of what happened. It doesn't take long when a loan officer's on the phone, when you see them throwing out rates, to see how many of those borrowers just hang up on them and be able to show them specifically how that's not getting the results they want. Then you got to pull them offside and spend a little bit of time on teaching them how to have more of a benefits-based response to that borrower, and then start just practicing and role-playing with them. It starts with a sales meeting that you can sit down with them, work through that, develop a 30-second, 40-second presentation that's very well put together. We've spent 21 years building scripts and approaches that we customize to all of our clients' environments that just light their conversion rates up overnight. But if you want to do it on your own, then just come up with a couple of benefits that will separate you and have them practice every single day. Look, the number one thing I made every loan officer do my entire career as a manager, and I managed for 12 and a half years before I became a consultant, very successfully, is I made them come in the morning and they practiced role play before they ever took a single lead. They were not allowed to pick up a phone when they walked in the door because they weren't prepared, they weren't ready, and they weren't confident. I wasn't going to allow that to happen. So it's really important that you guys make sure that you get them practiced and prepared.
Yeah. Well, Jeff, you've had a chance to do a lot of consulting with some of the clients and helping them to improve their conversion ratios. I mean, how important is sales training, right?
Yeah, I remember playing those recorded phone calls in the whole room, and some loan officers getting a little embarrassed because they after listening to the recording, you know, it's just a eye opener for them on things that they were doing wrong, mistakes, questions, you know, not listening to the borrower. So yeah, recorded phone calls is huge, as Dale said, and listening to them, and possibly in a group to put a little pressure on for everybody to step up, you know?
Yep.
That's great. Well, let's go into number 4, which is follow up.
So follow up, there's a couple of things. And part of it is, you know, you're not going to get every borrower. So you've got to leave a good voicemail. Now, one of the questions that was asked before this webinar was, what's a good voicemail? Well, here's what it is. First off, there's a couple of key elements to your voicemail. Number one is make sure that when you call somebody, if you get their voicemail message, the very first thing you want to do is you want to make sure that you start by letting them know what the purpose is for your call. Don't lead in with all of your company information and all that stuff. Come in and say, look, the reason I'm calling today, I want to literally show you 5 ways I can save you thousands of dollars in the next 12 months. Always come in with a grabber out of the gate. And then apologize for leaving a message. And I apologize for leaving this message in your voicemail, but here's what I need. I just need 2 minutes of your time initially if you'll call me back. And within 30 to 45 seconds, I can tell you what exactly I can do to help you initially to see if you're interested. So it's making sure that when you leave a message, first off, voicemail message should never be more than 30 seconds in length. I have literally seen loan officers leave 3.5-minute messages consistently. It's craziness. Nobody's listening to 3.5 minutes on a voicemail. So 30 seconds, very tight, real quick grabber, couple of key benefits. Hey, call me. I just need a couple minutes. And if I can't prove you, I can save you a ton of money. You can hang up the phone on me. If you make it an easy entry for your borrowers, then what happens is they will call you back. The second thing is, after you leave the voicemail, call them right back again. Because a lot of times what happens is they're screening the initial call when you call them, so they don't answer that phone. They let it go to voicemail, but when that number comes in a second time, that's very powerful. They're going to see that and go, okay, maybe this is something I need to take. And that one step will help you convert a lot more leads. And then use a call cadence from that point. And I do a lot of work with companies like Velocify. I actually work with them as a partner. A lot of the things they've implemented has been literally out of the training that I've done. I've done a lot of webcasts and a lot of training for their client base. And what we've come to is you need to do a 3-day process of leaving messages. So you call a borrower. If you don't get them, you leave a message. You try them right back. You try them then at least one more time in that day. And always look at, if it's something where they applied online, for example, look at what time they applied. That's when you want to try to call them, because that's usually when they're available. If you don't get them, then the next day do the same thing. Try them again, leave a voicemail if you don't get them, try them right back after the voicemail, and then try them one more time. And do that on a 3rd day. If you don't get them by the 3rd day, they're probably working with another loan officer. Now go to day 7. You don't need to make a call until day 7 now. Because what happens is a lot of your competition screws it up. And now you get a prime opportunity. And if that don't work and they don't respond, go to day 21. That means they're probably in process, but a lot of times deals fall out in the process. Call them on day 21. If that doesn't work, go to day 45. That's your last call. Because a lot of times what people do is they just get fed up. They back out. They don't do anything. And if you give it 45 days, now many times they're interested in talking again because they've kind of cooled down from that process. So the key on lead conversion is not only making sure that you call them right away, and that's one key thing. As soon as you get your lead, call them instantly. Velocify did a study on 3.5 million leads, and they found out that if you call in the first minute, it's a 391% better chance you will convert that lead. If you go to the second minute, it drops to 161%. If you go to the 30 minutes, it's like 27%. It's crazy how fast it drops off. Quicker you can get to them, the more you can use that cadence, the better off you're going to be.
Great. Going to number 5, accountability, Dale.
So accountability is where managers come into play. So if you're a manager on this call, I'm speaking to you specifically now as far as what you need to do, and that is manage leads, don't manage people. You know what? It never ceases to amaze me how many companies I work with where companies spend a lot of money, sometimes millions of dollars per year. In fact, in most cases of my clients, millions of dollars per year on marketing, and they don't have any accountability for those leads. They just hand them out to loan officers like candy out of a Pez dispenser. And you know what? The loan officers burn them, they cherry pick them, they leave them on the floor, they don't do a good job with them, and we just hand them more leads. You know what? I'm not handing you leads unless I know you're doing the right job with them. And every lead needs to have accountability to it. So when I hand you a lead, I expect to know within 24 hours that you've contacted them and you have a disposition on that. If you don't contact them within 24 hours, I might take that lead and hand it to a second loan officer. If you do contact them and you're not able to sell them, I'm always going to give it to a second loan officer because I want to give that second look. I want to make sure that we've got at least 2 people calling on every lead, because sometimes it's just the differences in the personalities between the borrower and the loan officer that keep that lead from being converted. And then once you do that, put them on a recycle process. But the key is making sure that when you hand out leads, that you hand them to them with an accountability process. If they don't do what they're supposed to do, you're going to give it to somebody else. They're going to lose access to leads. They'll do a much better job on those and rotate your leads out to maximize your returns.
Well, Dale, this is a common business practice that many mortgage companies and all organizations are going to, just because of the cost of the quality of the leads that they're generating. Talk about how that gets launched in an organization that doesn't have accountability, because that could upset the apple cart for some top level producers who've had a pretty comfy lead generation or lead delivery process. Would you have any recommendations on how to introduce it?
Well, first off, here's the key. You got to make sure your people understand what your cost is for your marketing leads. It's never ceased to amaze me how many times I walk in and I ask loan officers, so how much do you think your company pays? What do you think their marketing budget is per year? They don't know. How much do you think they pay per lead? And I give them their 3 different or 4 different lead sources. They don't know. And when I start explaining that leads can run you $25, $35, $55, $85, depending on the type of lead, I ask them the question, if you were the owner of this company, and you're handing out $85 bills, would you want something to happen with those? It changes their thought process about it. You got to educate your employees sometimes. If they don't change their thought process, they're the wrong employee, frankly. I'm probably looking for a new loan officer if they don't care about that. So
Sure.
You got to first educate them, and then what you got to do is develop whatever technological tools you can. Velocify is a great resource for things like that. And there's other sources too, but if you can't do it manually, then you better have some kind of technology system that can track those leads for you to make sure they're getting converted the way they should.
Dale, you've got some great online training resources. You've also got some deliverable training, and then you do your high-level consulting and speaking. Talk a little bit more about how companies can take your services and help them to incorporate these top 5 things.
Yeah. Well, we train cradle to grave. I've been a trainer and a speaker for 21 years. As I mentioned, I've trained over 1 million people around the country. We are teaching best practices every day. And every day I'm out in the field, in the market, learning more about how you can get better and better and better. So, we have access to every kind of training mode you can imagine, from e-learning training online, where you can get on-demand access to pre-recorded training for sales in refi leads, sales in purchase leads. If you're out there doing third-party originations, we've got that training too. We've got leadership training available, customer service training available, and then I do a lot of customized stuff for clients on site, where they bring me in and I'm actually working with the management teams on site, working with the loan officers on site, customizing that into their situation through our Mortgage Champions training, which is the #1 training in the country. In fact, LendingTree, it's such a good training program that LendingTree 6 years ago hired us as their exclusive mortgage trainer for the entire industry. So we work with all of the LendingTree network lenders out there. That just gives you an idea of how good the training is. We've been doing that for 6 years with them. So that kind of gives you an idea on it.
Well, you've also got a great message that you give out to mortgage professionals and your Mortgage Champions crew, and that's just the idea of doing well and also doing good. Talk a little bit more about some of the stuff that you're doing.
Well, I believe that professional success without personal success is no success at all. And I believe that really what we're called to is the greater good. We're not here just to, we forget, I think, sometimes how blessed we are in the mortgage industry and how much money we make. I mean, it's not uncommon to make six-figure incomes in this business. That puts us in the top 1/2 of earnings in the entire world. Almost half of the planet lives on less than $7,000 per year. I'm a firm believer that, the quote that you've got up is one of my favorites all the time, that in the end, we will be judged by our standard of life, not our standard of living, by our measure of giving, not our measure of wealth, and by our simple goodness and our seeming greatness. So if you go to the next slide, we started an organization several years ago called Mortgage Professionals Providing Hope. You can check it out at mpph.org. And the purpose for that was to help those who can't help themselves by taking some of the wealth in our industry. And for those who don't have a place that they say, I don't know where to give to, we've got a place we can help you with. 100% of the dollars we raise go directly to the people we work with. We vet out every one of the organizations we work with personally. I know the organizations personally. I'm actually traveling to Africa in 2 weeks to work with some people. We go to India very regularly. We do a lot of work here in the States with different organizations. And what we do is we provide money to help children, help families, and help those who are less fortunate. And we're trying to build something that's a force for good in the mortgage industry. And loan officers can sign up or companies can sign up. You can check it all out. If you're interested, just contact me or email me, and I'll get Michael Percato, who is the head of MPPH, to get a hold of you, and he'll walk you through how you can be a force for good in the mortgage industry.
Great. Mortgage training, opportunity to give back. And obviously we've got the mortgage marketing aspects with Overflow Works. If you didn't get a chance to jot this stuff down, here's the phone number for Overflow Works, 800-784-5194. Jeff, any closing remarks?
Nothing specific, Dave. Just looking forward to connecting with some of these groups one-on-one and present some more information.
Great. Well, thank you guys for delivering your expertise. It's always a pleasure to partner with you and to share your guys' just enormous wealth of proven tactics and strategies. Dale, it was a pleasure seeing you, and thanks for sharing. Jeff, we'll see you again on our next webinar. Thanks, participants, for joining in with us. And if you like what you heard, give the guys a call. I'm sure they'll help you to increase your closing ratios and improve your response rates. Thanks, everybody.
Thanks.
God bless, guys.